The Tapered Annual Allowance applies to people who are classified as high earners and means that in some cases, the amount that can be paid into their pension could be as low as £4,000 a year, and if more is paid in, they get taxed on the excess. But how much does an employee have to earn to be caught by the Tapered Annual Allowance? There are two main earning definitions that define if someone is caught by the Tapered Annual Allowance. These are adjusted income and threshold income. But as an employer, you only need to worry about adjusted income to help your high earners avoid an unexpected tax bill, but still be saving for their retirement. Adjusted income includes an employee's total taxable earnings, including any private income, as well as any pension contributions. If an employee's adjusted income in any tax year exceeds £240,000, the amount the employer and the employee combined can pay into their pension so the employee does not pay excess tax will need to be lower than the annual allowance, which is currently £40,000. The annual allowance is reduced by £1 for every £2 that they earn over £240,000. This means that a higher earning employee could have an annual allowance of anywhere between £40,000 and £4,000. They will have to pay tax on any pension contributions that exceed this. For example, let's look at Louise. She has a salary of £220,000, but also has private income from a rental property of £20,000 a year. Her employer contributes £20,000 into her pension, and so does she. Her adjusted income is £260,000, and so her annual allowance is reduced to £30,000. That is, her annual allowance is reduced by £10,000, £1 for every £2 over the £240,000 threshold. Any contributions paid into her pension over and above £30,000 will be taxed, unless she has any unused allowance from the previous 3 years. But there's a solution: pension redirect, and here's how it works. You first need to decide who you're going to offer pension redirect to. Remember, employers only know about employee salaries, not about their private income. For example, you might have an employee like Louise earning £220,000 a year with an employer pension contribution of £20,000 a year. You might assume she's not affected by the Tapered Annual Allowance, but unknown to you, she has a private income of £20,000 a year, which means she is in fact affected. To avoid this situation, employers normally choose to offer pension redirect to anyone with a salary of less than the adjusted income level, for instance, £200,000, which then gives some room for other unknown private earnings. Once you've set the salary level, you then offer these employees the option of limiting how much gets paid into their pension. Many employers decide to set this limit to £4,000 a year across the board. The reason many employers choose this level is because £4,000 is the minimum annual allowance everyone, regardless of earnings, is entitled to. So at this level, no one is going to get a tax bill, guaranteed. Now that we know who is going to be offered pension redirect and the pension contribution limit has been agreed, you need to get the offer out to employees. You can use your flexible benefits platform to record employees' choices, or an email campaign, or even the Cushon mobile app. We can talk you through all of the options so that you get to a solution that's easy for everyone. From a date that you choose, pension contributions for employees who have selected pension redirect are limited to £4,000, with the balance being directed into a workplace ISA. Employees now have their retirement savings split between a pension and a workplace ISA, and they don't have to worry about an unexpected tax bill. If at the end of the tax year, an employee's annual allowance is more than £4,000, they can pay in a lump sum into their pension to take advantage of their full allowance. Pension redirect. a solution that gets everyone saving for retirement but avoids an unexpected tax bill.